Well, hello, everybody. I posted this comment because, anybody who bought the dip last week cut their fingers. Posted this comment. Everybody is down, frustrated. The market's tanking as we speak. But you know what? This is what happens. We went through some historic movements over the last week or so. Things are worse than everybody expected. But here we are. Anyway, this is Q&A time. Let's get into the questions, see what's on people's minds, everybody. Let's see if this works. Yeah. This video today is called Decision Time. When will it stop? One Bridem. First question. Boom. Oh, that bar came quick. I saw. When will it stop? I missed it. It came fast. Anyway, let's tackle this question first. And I won't be doing questions today because nobody's in a good mood. But I will always show up every day, no matter how bad the weather is. The question is, when will this stop? After historic dips like last week, it's unlikely that there's more bad stuff to come. I did think that Bitcoin became a risk-off asset. The question is now it just dipped below 80K. We are down at 79K. And let's check year to date. We've been down at this level 4 times this year so far. So actually 4 times in the last month and a half. We don't know where we're going to go. This could be typical market manipulation on a Sunday. They wait for everybody to be asleep and they dump it. So the so-called, the players made a post on it the other day. Anyway, let's get into the questions and see what's going on in the world. This is called Decision Time. Everybody's trying to make decisions and, of course, not financial advice. And all the questions come from Patreon. Big thank you to everybody on Patreon. And thank you to everybody for being so positive today. Huge shout out to Sean Donnelly, TND Tesla. Heisenberg is there. Psych Experience, Martello, Bottle of Red, everybody else. Let's get into it. First one is from Chewy. Scary to see over 6 million defaulting on mortgages since real estate crash in 2009 to the 2010 preceded Bitcoin. What is the impact of a crash similar, if not worse, magnitude 2025, 2026 on our investments, primarily Bitcoin and MicroStrategy, Solana, and Tesla? First of all, Chewy, 6 million aren't defaulting on mortgages in the United States. 6 million people are behind on their mortgages. So we don't have the same setup as the global financial crisis. And global financial crisis was bad, but the market dip we've just had is actually worse, which has triggered some people like Dan Ives called it a self-inflicted wound. All this tariff stuff that's going on, way worse than expected, and the market's very rattled. But let's get into why it is a little bit different this time around. And I do not see it as a global financial crisis, and I'll tell you why exactly. First of all, if I can get my little picture to show up. First of all, again, it's different this time. Last time we had a global financial crisis, you had every Tom, Dick, and Harry buying 2, 3, 4, 5, 6 different investment properties because the rates were so low. There was also no underwriting rules in place, so they're just giving out money willy-nilly. They were doing these exotic brokerages, no money down, very low initial interest rates, and then they jack the rates, etc. And it's a very, very different time. The underwriting standards are higher. Households and banks have better balance sheets today. We don't have all this collateral lending, CDS stuff that we had back then, which triggered the cascade of foreclosures and losses and brought down big financial institutions. That will not happen. And also, I think I mentioned this in Patreon, we have a kind of record high equity in their homes. The average American has 62% equity in their homes in 2024. And that's up from 36% in 2009. And this is a huge buffer against banks foreclosing. People will not give up their castle, especially when they have so much equity in it. So I think it's not a problem. In short, better underwriting. Borrowers aren't in over their heads. Borrowers aren't getting in multiple properties. There's no rampant property flipping. In fact, there's no flipping at all because the market's dead. It's completely different, and we don't have the same systemic risk that we had last time. So from that perspective, we're good. It's not a global financial crisis. However, the market dip is actually worse than the GFC. GFC was kind of like one bank hit the wall, bang, another bank hit the wall, bang, another bank. It was like a gradual decline. This one was extremely fast. So I hope that helps. Anyway, let's get on to the second question because we got a couple of things to get through today. This one, if I can read this carefully, zoom in a bit. Man on a mission. First time you posted. I notice your portfolio you upload is basically filled with exceptionally well-rounded stocks and cryptos. My question is, do you have another portfolio that consists of REITs or BDCs, personal real estate, etc.? I was looking to get into these types of investments, but I noticed your lack of exposure. I would really appreciate any insights into these type of investments. If you're not exposed at all, can you explain why or why not? I'm not even sure what a BDC is. REITs, I would never own in a million years. And I share all I do very openly and transparently. I have no plan B portfolio. I am 95% in 4 assets. I do have cash and I do have real estate, rental properties. But if I could press a magic button and pivot them into an asset right now, I would. But it's always important to have real estate. You kind of fall back on it. It's something that's safe, grows over time. You can lever it up, etc. So that's just me. My way has always been very, very concentrated bets in very important upcoming narratives, and then rotating during seasons and cycles. That's pretty much it. Or hedging. That's so. Man on a mission. Thank you for your question. And no, I don't have any BDCs or REITs or anything else. And be careful with REITs as well. We've done a bunch of videos on those and why they are typically not a very good investment at all, because there's so many people that feed off all of the whole food chain in REITs, and you're the last one to get paid. So don't do it. If you have to own real estate, multi-unit properties are great, especially in fast-growing cities. With that rent control, preferably. Soul Strider, thanks for hanging in there. Solana is weak today. Yes, indeed. Next question is from TGP7. If you had a tax-free account in which you couldn't sell puts, the case in Canada, and had only a few $100,000, how would it affect your option strategy? Would you continue to primarily trade synthetic longs in a taxable margin account? Focus on long leaps, tax-free, and sell covered calls, which are permitted, etc. And thank you for trying to keep everything positive, even when the world seems to be going to poop. Many blessings to you and your family. You too, and thank you for the positive attitude. Yeah, this is forgot to share the question. I'm reading it in a bigger screen so I can see it. Anyway, this is important. So yeah. I'm not sure of the exact rules and not able to sell puts in Canada. In a tax-free account, there are a lot of regulations in the US too, and a lot of tax-free accounts. But what I did, I basically made everything during covered calls in the 90s. You can still do incredibly well using covered calls. Do that. Play the wheel. You can't sell puts, so you probably can't do that. I have done that a lot. I love selling puts and I love leaps. Sometimes it's important not to get too boxed into the limitations of a retirement account. You never go broke paying taxes, although it can hurt. And not paying taxes in a retirement account can work as well. What we've also shown in 2024, what you can do in a retirement account as well, forget options, just swapping between assets, pair trading, between two very volatile assets can work really well. We saw on Friday, MicroStrategy versus Tesla, 16% move on that pair in a day. Unbelievable to see that type of move. So if you can time it right and you have a system, you can even make money pair trading. But just have a process, have a system. Paper trade first, revise it, and then covered calls are also killer, especially during volatile times. And remember as well, think of it this way. I'll try to use my hands. So when things are very volatile, you sell options. When things are not volatile, you buy things like leaps. But during volatile times, leaps are extremely expensive. So beware of that as well as you go forward. So that would be what I would do, and hang tough. TGP7. Next question from Gaurav. And this one, I feel a little bit bags. Got to throw a little bit of a cold blanket on this, and sometimes people have unrealistic expectations. Yes, there are some trades that can do 20x's, 30x's, etc., but you need to have a perfect set of market conditions and perfect positioning to make this happen. I want to warn people of that before we get into this question. Thank you as well for being part of the community. Recently, I had to unwind a significant leverage position in Tesla due to a margin call. While the loss was minimal, that's good news. The timing of the sale was far from ideal, which was frustrating, but it turned out to be an excellent learning experience. Good job. ABL, always be learning. That's so important. Looking ahead, my goal is to grow a Tesla position to about 2,500 to 5,000 shares by Q3, using initial capital of $50,000 to $70,000. I'd love to hear your thoughts. Why do you think this is the most effective tool, or what do you think is the most effective tool or strategy to building a position like this? Thanks much, Gaurav. Thank you so much for this as well. First of all, let's go back to margin call liquidation. I call this always having a mattress. Liquidations happen at the worst possible times, and you always need that safety mattress as well. So if you are playing leverage, make sure you have oodles and oodles of margin, okay? So for example, with me, my margin position is way larger than my cash position. So I can take a lot of risk. I could have the markets take a 70% haircut and still be completely fine. Thank God, by the way. Bitcoin's getting back to 80K. Manipulation much? Yes. So the other thing I want to talk to you about this as well is, rough math in my head, you want to get to 2,500 Tesla shares using 50K. 2,500 Tesla shares, an average price of 300, what is that? $1.5 million. That's a ballpark, 25x from here? That is unrealistic. Yes, you can make 25x's, 30x's, but you need to use very specific options positions, and you need to buy things at absolute bottoms. And you just got, margin call at a bottom. So be careful with that. Don't expose anybody out there as well. This is why you have mattress. And yes, it can be tempting to blow it all, but you rarely do that. You always have to have like 7% cash, 5 to 7% cash, and margin, lots of margin. That's why you build stacks of positions like equities you've had for, like I've had, things like Tesla and stuff for 7 years, 8 years now. And that becomes my mattress. And then I can sell puts all day long whenever I want, because there's no risk of getting liquidated. But you always have to manage risk. So I do want to stress that. The other thing is you want to create a very, very big bag in a very short window. And that's extremely hard to do. If you're trying to do that, you're going to take on huge risk, which means you're going to get wrecked. Don't do that. This is the danger of the temptation of, and the pressure of trying to build a huge position as well. There are places where you can do this, at least get a dent. As I mentioned before, pair trading, like the MicroStrategy Tesla pair, moved up 16% on Friday in one day. If you could just take 2 or 3% once a week and compound that with success, you're good to go. The other option is pair trading on steroids. We have a lot of people in the community that are killing it with that product. That's inverse correlated pairs. You can go, say, Tesla, Teslac, or leverage, NVIDIA long, NVIDIA short, whatever it is. They are great ways. But the problem is taxes. If you can do it tax-free, that's also great. But it will require that meticulous execution. And I warn you right now, again, do not think you can take 50 grand and turn it into 2,500 Tesla shares by Q3. That's basically less than 6 months away. That is unrealistic, very unrealistic. So everybody, if you have unrealistic goals, your dreams will be shattered. Start with very small goals, execute, and then increase your targets and get more and more aggressive as you win a very high percent of the time. Always gun for 80% win rate as well with trading. That's kind of my whole thing. I basically build everything around Pareto efficiency. Absolutely key. Sean Donnelly, thank you so much again for being here. Let's get into the next question. Sorry, Gaurav, for those grief tidings. I hope that helped a little bit at least. This is a question that I'm going to have to blow up a little bit and read. The screen I have a little bit small here, But it's a deep one as well. This is from Moonwaves. I was born female to a suppressive culture, had an arranged marriage, knew nothing about investing, never had to work till I divorced. Wake up call number one in 2013. I saw a documentary about the fiat system. Wake up call number two, found Bitcoin. Invested $2,000 on 10 Bitcoin. Forgot about it. More research. Years later, sold my IRAs and I bought another 20 Bitcoin. Bitcoin was my retirement plan at death, given to my grandchildren. Woohoo, amazing to you. And how I'd finally buy a home. Learned hard lessons, etc. I'm in my early 60s, live in a small rent stabilized apartment in New York City, and make 130K a year. Your risk adjusted ratio believes in a certain mix of assets. Again, that, by the way, that risk adjusted ratio was at a point in time when prices were at a certain point in time. Everything kind of changes, especially now at the market dip. Things are even cheaper. So the risk reward changes dramatically. Remember, when those things are done, they're at a very specific point in time. Question one, because of you, I just rolled over 58,000 SEP IRA to Charles Schwab to buy Tesla MicroStrategy. How much of each should I buy and at what price? Unfortunately, for now, I only know how to do limit orders. Question two, I want to use Bitcoin loans to buy my first home. If the president removes capital gains on Bitcoin, should I sell some and buy a home and or Tesla stock? If so, how much? And apart from Bitcoin, being part of your Patreon family is the best investment. You are so kind. And I love your heart too. And your story is incredibly inspiring. You've not only faced and overcome, immense personal challenges. And sometimes as well, this happens in life. It takes a challenge for us to reset and focus our minds. In fact, divorce is that. C19 is that. What you've done, you should be immensely proud of. I am very stunned. But before we get into that, make sure your security is buttoned up, okay? Very, very secure. And you're absolutely right. Many people experience a powerful wake-up call after a major life change. In fact, it's these transitions where we find clarity, reclaim our voice, begin the journey of rebuilding, building a financial future on your terms, nobody else's. And the good news is it's never too late to take control of your wealth, and your path from discovering Bitcoin, etc., is incredible. So you are well on the path to, you're already beyond successful. So congratulations. But be careful with the security as well. There are people that are just targeting things like this. So what you could do as well, the issue is tax, because you're in Bitcoin at a very low cost basis. If it did flip to capital gains free, wow, that would be incredible. But don't bank on that. That would be extremely difficult for that to happen. Now, your rolling over of the SEP IRA is a great move. As I mentioned, cap gains are eliminated on crypto. You need to rebalance hard. You're way too heavy Bitcoin and you have nothing else. And as I've said, since the 4th of July, 2024, I do believe Tesla will outperform Bitcoin. But we'll see. If a supply crunch kicks in, all bets are off. But that may never happen. And everybody needs a castle. Borrowing against your Bitcoin, there's lots of good players coming out to do that right now. In fact, lots of key players. The industry will mature very well, but it's also still very risky. But you should definitely think about that, but only with a very, very trusted top tier institution, like along the lines of a Fidelity or something like that. Big safe shop. And security is number one. I'll remind that again for the third time. And maybe even if there are taxes, the long-term capital gains, 20% in New York, take a little bit off the top and rebalance. There's always a chance one asset, and I believe in diversification, but still very high concentration diversification. But you are way too heavy Bitcoin and way too light in other assets. So all of the above, you're thinking the right way. Get more Tesla and try get it, or NVIDIA or an AI exposure before things kick off like summer of this year. And we're hoping that Bitcoin will still have some ways to go. A lot of people saying the bull market's over. It's just a very difficult time. And all the dip now is driven by the macro last week. So hopefully that'll change. Anyway, and hopefully Bitcoin will rally into the night. So congratulations once again, you're well set, but you do need to diversify a little bit more. You're too heavy. And don't wait for capital gains to disappear before you do that, because then it might be too late. And yeah, take some off the table and reallocate to in you know what. Thank you for the question. Next question is from Shanzi. This is an interesting one. Considering this is actually a fantastic one. This got my, I was digging into this last night. Considering the possibility that AI will replace many jobs in the near future, which is a trend I've already noticing in administrative roles in my workplace. Yes, there's a lot more of that to come. Wait till AI agents are mature. Boom. Administrative assistants will become, I'm unfortunate to say, a thing of the past. So if you know anybody who is in that field, tell them to start preparing. And again, I feel like I'm sharing some depressing news, but the change that's coming, nobody is ready for. I'm not even ready for it too. But I'm concerned, back to Shanzi, I'm concerned that losing our jobs to AI is almost certain, and that finding full-time work afterward will be challenging. One idea I've been considering is whether or not it makes sense to take voluntary redundancy in the near future and invest approximately 300 shares, Tesla shares. Based on some analyses I've studied, I think these shares could potentially be worth 1 to 2 million in 5 years. If I stay in my job, I suspect AI will eventually take it away, and I'd miss out on Tesla potential growth, leaving me with much less financial stability, even after working another 5 to 10 years full time. Does this sound like a sensible approach? Well, this is brilliant. And kudos to you for asking such you're facing the music and you have a plan. And I'm very proud of that. That's like brilliance everywhere. Amazing. So let's get into kind of summarize that intro to a couple of things, where we stand. First of all, kudos once again to your impressive calculus. Option A, get a lump sum, buy 300 shares, and you get to pivot into creative pursuit, potentially with lower or maybe no immediate income, or maybe the same income, but you're much happier in your job. Option B is you keep earning a salary until AI takes your job. You miss the chance to buy Tesla shares and you delay your creative pursuit. Remember, life is short. If you don't like your job, etc., that's just no fun. Now, some of the numbers, if we look at some educated guesses, we have Tesla now. We had a big dip of Tesla a few weeks back to 220. Now it's about 235. It may dip. Monday could be an ugly open and then a rebound is what I imagine will happen. So I'll have my finger on the trigger in the morning. But if you have enough, if you get your early redundancy and enough to say buy 300 shares, let's assume it's 90,000 after taxes. You'd have extra cash for living expenses, etc. And your current salary, let's assume that's 60K. I don't know, I'm just guessing here. What would happen? And this is the fun part of this analysis. So I ran some example numbers just to think out loud. And the key is, do you need your salary now to survive? Can you handle your burn, or can you get a gig, a part-time gig, or do something on the side to create enough income to cover your expenses so you can invest? That's so important. And always have an emergency buffer as well in the event of adverse medical, etc. So again, 90K, 300 shares. In fact, if you had 90K now, you get more than 300 shares. And by the way, it's kind of bizarre. Everybody's asking questions about Tesla. I don't make up the questions, everybody. These are what's on people's minds. It's like maybe everybody has their Bitcoin bags full, but not their Tesla bag. I don't know. We'll see. Now, Tesla price in 2030. Low end, bear case is 2,000. Okay, so we're going to go from 200 to 2,000 in 5 years. It's 10x, not bad. Mid case, for many experts out there, is $5,000. High case, 8,000. I made a video 3 years ago called 8 Ways to 8,000, and people laughed me out of the room. We'll see. I'm going to stick around to see if that happens. But that was like by 2032, not 2030. Those extra 2 years, again, imagine you get to 2000 and then things really go exponential. You go to 4,000 and then you double again and go to 8,000. That's why the 2030 to 2032 will be a crazy period. Your portfolio value on these 300 shares will go from 600K, low end, mid, 1.5 million, high, 2.4 million. More than 1.5 million is life-changing. That's a retirement bag right there. That's why I've stressed as well, for years and years, for everybody. We have plans to build bags of a certain number of shares, a certain number of Bitcoin, a certain number of whatever for all these different assets. The number for Tesla was always 300. So again, you've been listening, which is great. Now, if you don't do the retirement plan, maybe you have 40K saved by year 5. Maybe you live paycheck to paycheck. I don't know that. But you could find a way of buying maybe 20 shares with 40,000. I don't know. But then your retirement is extremely different. So if you can, this is the key. If you can find a way to hold on, cover your expenses, control your burn, get the bag of shares, sit tight for 4 years, 5 years, then very clearly, as you see here, your portfolio will be worth a lot more. But getting back to some numbers, these are 2 top Tesla experts that I admire very much in the space. Okay, Søren Basher. Okay, this guy is wicked smart. Okay, there's few financial modelers I respect, and I love financial modeling. Been modeling for not that modeling, the other modeling for nearly 40 years, and it's my favorite thing to do. Søren is brilliant. And so is this other fellow on the right, Joe, back to you, German fellow. These 2 both see Tesla hitting $10,000 in 5 years. Theoretically possible, again, based on modeling. Joe, back in November 26th, 2024, I think it was Curious Pagey, Joe predicted that Tesla stock could easily exceed 10,000 by 2030. And again, it's this exponentiality that people aren't ready for. It sounds bonkers. Let's go back to my numbers as to what I believe the low end is by 2030. 2,000, mid 5, high 8. Okay, that's me. Other people think 10K easy by 2030. I think 8K maybe by 2032. We shall see. Either way, it's at least a 10x from here, which is great. There's not many assets that do that. So these are 2 Tesla experts. Check them out. We'll leave links below as to why. Dig into why they believe this could happen. And this is the conclusion for the case. And I must say, Shanzi, I love this question because it made me think. So best case, all right, you take the redundancy, you get your 90K, you buy your 300 shares, you become a millionaire in a couple of years, and you have your creative freedom, which means a much higher quality of life. But the worst case is you're broke, but you have 5 years of life well lived. If Tesla goes to 0, which is not going to happen. And then the best case, if you stay in the job, you got a small nest egg, and you got job stability for at least 3 to 5 years. Worst case, you miss Tesla rocket and face a late AI layoff. I don't know what's going to happen. That's for you to decide. But again, if you can find a way to get another gig and take that redundancy, I do it. Because there's a high odds if you can just hang on for 5 years with that bag, you'll do very well. So, Shanzi, thank you for the question. Next question is from Jay Wick. Doesn't he have a movie? John Wick. Maybe it's John Wick asking me a question. Hi, James. I'm about to start a SMSF and move all my current super over into it. I think a super is a superannuation fund in Australia. I think an SMSF is your individually managed one. Your content has helped me make this decision, so thank you. Woohoo! If you had 150K cash, how would you structure buying in this market, and what would you buy? I live in Australia, in my 30s. I want to open up international share trading accounts so I can definitely invest in American markets and stocks. Also happy to be actively monitoring it. Woohoo! Well done. So shout out to everybody in Australia too. So for what I bought this week, what I'm doing, I bought a big bag of Tesla 220 like a week or two, maybe 3 ago, and again at 244. I bought my first bag of NVIDIA, first one since 2022. I bought a big bag of NVIDIA. I sold 80% of it, kept 20%. Now I've doubled that. So I am back on the NVIDIA train in earnest. And this may not be the bottom. There might be more bottom to come. But remember, we're getting close to a bottom. Okay? NVIDIA didn't die. The company fundamentals have not changed. The tariffs don't affect Tesla. Yes, the macro may be hit. Yes, people have maybe less money. But net, we shall see where it goes. But this, I think, will pass, as they say, as well. And regarding crypto, alts are beaten to hell. I've been talking a lot about how we're 80% through the bull run. We don't know where we're going next. Could it be over? Yeah, 10% chance the bull run's over. But I think much of this downdraft is driven by the actual tariff stuff that's going on right now, which everybody is well aware of, and I'm sick of talking about, to be quite frank. So that's where we are. These are the things I'm nibbling on, positioning myself heavily for AI, because AI will still be a very big narrative over the next 2 to 3 years. And that's how I'm playing it. Again, high concentration bets, very few assets, the leaders, the complete leaders in the position. And then people doubt Tesla. Just look at the track record. Follow the track record of people. Most important thing you can ever do. Next question is from Haas Subs. I understand your Solana altcoin allocation is about 1% of your total Solana holdings. It's actually about 1.4% of my total holdings. It would be a tiny, tiny fraction of my Solana. I'd love to hear your current thoughts on Jupiter. Do you still believe in their product market fit? Are they continuing to deliver and ship new products? And what's your price prediction for JUP by the end of the year? I think many of us are hesitant to hold through a potential bear market. So it's hard to gauge what's ahead for Solana-based altcoins. Well, all crypto is smashed. Bitcoin's holding up okay, but the rest is brutal. And Jupiter is my largest sol alt position right now, but they're all tanking. Actually, let's look at the chart first. This is Jupiter where it began. It opened up small around 20 cents, shot to 50 cents, fell down to about 36 cents. And we're back now where it was after it launched, pretty much. It did break that level 2 support you can see there on the chart. Let me try and pull up that level 2 support so I can see the exact number. And that was about 70 cents. That broke. Now we're exactly half of that 70 cents down. So it has been, as usual, brutal out there for everything. Everything is just getting sold off. Now, why Jupiter is solid, I still think it's one of the best, and I like it for a reason. A couple of reasons. Very good adoption. They have huge traction with the solid ecosystem. They have millions of unique users, and they do about 350 million at least in daily trading volume over at least 100 to 200,000 active users, sometimes more depending on the season. And it's one of the most used decentralized exchange aggregators on the market, period. Also, you mentioned product market fit. Their swap aggregation engine optimizes trades by routing transactions across multiple liquidity pools. So you get far better reduced slippage and fees. I've noticed fees are actually a lot less than they used to be as well, which has gotten better. And there's lots of cool tools, the DCA tools, perp tools, bridge comparator, and all sorts of stuff, even just straight swaps. Also, rev generation. They make a ton of money. 80% is organic trading volume on Solana. Perps make a ton of money too. They have brilliant tokenomics. They had a big burn as well. I think 30% supply reduction in June of last year to address inflation concerns. And I was going to say it was resilient for the longest time at 70 cents, but now it's dipped. Am I buying? No. I'm waiting for things to turn around, and we're not seeing that turnaround yet. But Jupiter is still very, very solid out there. So hang tight with that one. I'm still holding all my Sol alts, despite, we always knew they were way out in the risk curve, very, very risky. And they've all shriveled up. But we have to wait. Will we get that banana zone that Raoul Paul talks about? I don't know. We need some big catalysts. The Sol ETF could be that catalyst. And that will happen this year. And that could help us a lot. So hang tough. I'm 80%, 90% sure the bull market's not over, but there's a chance it is. There's a chance everything could go to zero, as always, but we have to wait and see. One thing I do want to mention too as well, it's times like this when everybody's hurting, everybody has a lot of pain, everybody's depressed, everybody's angry. As Raoul Pal would say, everybody's throwing poop. It's that season, but these often are the best times to buy. All right. I always call it running into burning buildings. This is why we have cash. All right. These are the times not to be depressed, not to be afraid, but to take action, everybody. So just my experience, what's worked for me in the past. Jupiter chart, toilet. Next question from D. Dangle. First time poster here. What is your succession plan regarding InvestAnswers community and everything you do and the theme of built so far? Does the ship continue to sail if you choose to step aside or, God forbid, move on from this life? That can happen as well. I'm not getting any younger. And I'm have been extremely conscious and fearful of AI and everything else. It's coming for all of us. And that's why a big part of my focus is to try to get as many tools out there so people can make a difference over the next, say, 2 years or so. Because after that, everything will be automated. We'll just be along for the ride. We won't be in control. That's why I've got this extreme sense of urgency. But what'll happen? We have a huge and growing cottage industry of folks. We've got people that do everything. We have writers. We have experienced developers that are doing things that have never been done before. Really tricky stuff. The rotation model we've been working on for a long time now. We just got version 11. Still not fully baked. It's the trickiest thing ever. That's been a big focus. We have lots of trainers to help people get into trading, get better at trading, etc. We have researchers. Everything will be fine. If anything happens to be, everything will continue. There's a team that will continue everything, on our back end. And we've got, the cottage industry of young people bubbling up as well. It's going to be just fine. But I was planning to maybe step aside after this bull run. That was the initial plan. But maybe we'll keep it going. And somebody said, you got to stick around till Tesla hits 2,000. I think I foolishly said, okay, I will. But I'm a man of my word. If I say I do something, I'll do it. So maybe I'm here till Tesla hits 2,000. We'll see when that happens. I don't know, but I'll try. But the daily video thing now for 4.5 years, 4.25 years is very tough. That will cease to happen after the bull market. And I'm going to focus much more on personal trading. All the models will be baked, hopefully, at that stage. And I can start sharing the trading stuff that I like to do kind of live, which will be fun. So I hope that helps. And this week, we're helping Hedgehog Cabin to support the care and food of these cute little fellows. And this is in celebration of our moderator, T&D Tesla's upcoming birthday. Woohoo! She loves hedgehogs. In fact, hedgehog is also the symbol. I think when you buy a new Tesla, you get a little hedgehog. And that explains T&D's logo too. So thank you all for coming. I'm not going to do questions today because everybody's just not in a good place. But yeah. Thank you, people all over the world. Italy, Ireland, Spain, UK. Let me see. Oh, there's a question. What does the community cover? Oh, what it takes and how to access. Yeah, that community is insane. I did a one years and years ago, what's in the community, but we'll do an update as well because it's quite breathtaking how big it is and just how much content there is. It's completely insane. And there's something for everybody as well. So thank you all, everybody. Shout out to the hedgehogs. Boo! In honor of T&D Tesla. And thank you all, everybody. You guys take care. Germany, Canada, France, Belgium, UK, Liverpool. Yeah, be safe, everybody. Thank you all for coming. See you tomorrow. DCA Live in the morning. Bye.